I'm going to go over Bitcoin with my like kind numbers and my 2-bar back strategies and see what we can make of the latest movements on Bitcoin. And if you've seen my previous video, then you would have seen where I went over all of this stuff through here and explained to you how and where you can look for moves. And I ended it around in here and was telling you all that the options that the market has in the highest time frame perspective is going to be looking at these large bar sections right here. So we'll be looking at pink to the first bold dotted and the bold dotted to the next as 2 bars. And then now we're in the third bar. If you look at the 2-bar back strategy and think about that, then that tells you that this is in the high time frame of these large candles that I was just talking about. We are in the third bar. This is the third one. These are 25-week bars. Each one of these 25 weeks, 25 weeks, and 25 weeks. And so each one of these are broken down into large sections. These are 125-week sections. These bold sections are 25-week sections. And then each one of these little sections in here where you see these, and then they end with a darker line here. These are 5-week sections, and then these are individual week bars with the weekly days, the daily time frame, days of the week inside of there. So when we know in the high time frame that we are in this third bar, we know we can look 2 bars back for the main targets. That's this bar here, the first 25-week bar, and that puts in a high, a low. It has an open and a close. So in terms of this whole 25-week bar here, in terms of its main targets, you may see that some traders will, or heard that some traders will tell you do not trade unless you've triggered a high, a low, or a closing level. And this will be referencing the same type of mathematical understanding here. So you have a high, a low, the open, and the close that are the target for this 25-week bar, and it has 5 individual weeks in it. And if we go to this bar and we look at it, this will be bar 2. We could look at this bar as like a Tuesday. Tuesday put in a high, then Tuesday broke its own high, and in that perspective, we could say if it was a Tuesday, it's really a bar 2. So we're going to go back to referencing it as bar 2. When we look at bar 2 has expanded 1. That's like Tuesday going outside of Monday, so we can know all of our statistics about how to bounce them mathematical boundaries through. And the higher time frame up top, it gave a 2-bar back short, came in here, and it gave another 2-bar back short, dropped us down into here. And in this 5-week bar, if I take and spread it out like this, in this 5-week bar, we would be right here. We would be the third week of the 5-week bar. So that's bar 3. And like kind numbers, odds and evens like to fail what their own kind or use them to bounce off. So 3, the third week here, was under the first week. So week 1, bar 1, or 5, this 5-week bar 1, and 5-week bar 3, 1 rejected. 3 rejected, 1. Here's the closing level coming across right here. I will make that a little more easier to see for you there. So it is the closing level. 3 comes up, rejects it. At the same time, it gives a 2-bar back, lower time frame, daily candle, 2-bar back short. I was telling you in this day that you could mark this out. I marked it out and drug it out for a few days. And in inferring and left you at the chart where you could see this was the third week under the first week. And this right here is the low of that first week. So that right there is from the high. If we take this line here and we move this back, as we know it's from the other candle, we look at this 5-week bar. This was our first bar's opening range. This is our second bar, extended out and came down and started doing our little 2-bar back shorts, 2-bar back, fell up underneath this week under the other week, 2 bars back in the day on the inside of the candle. We come up into this, we dump down, and we hit in bar 3, we hit the low of the fifth one over here, and that's like kind numbers there, odds or evens. And in the high here, we have a 2-bar back short. I want to also add that this is bar 2 of my 5-week bar. This is bar 4 of my 5-week bar with like kind numbers. This short level here is 2 bars back. And again, I forgot to mention this in the video, so I'm going to go ahead and add this in here in just a second. But yeah, so 2 bars back at 2 bars back. And what do we have? Bar 1 Monday, bar 3 Wednesday, day 3 rejected day 1 levels, and bar 4 rejecting bar 2. So it's been moving down, and we are bar 2 has expanded bar 1's opening range of this 25-week bar. This 5-week bar number 2 has broken the highs and lows of bar number 5-week bar number 1 of the 25-week bar. Okay, so that is why we have this pattern working here. We can make that a little more bold for you so that you can see it. That is our opening range bar for a 5-week bar in a 25-week form. This is the first 5-week bar. This is the second 5-week bar. This is the, and bar 2 broke bar 1. And in the 5-week bar itself, bar 2 broke bar 1. Both came inside, crossed the ranges, traded, gave the signals. The higher time frame 25-week bar level comes in. It closes. It goes up and goes below the close, touches it. The same little levels. If you look across here, this is an extremely powerful level. It hits it, does the short, comes down, hits target number 1. Now, if we're talking, now that's just referring to this 25-week bar, this bold line to this bold line. Now, in the terms of 5-week bar, 2 bars back, this is my target. That is a potential to bring this range. It could come inside of this range. We are week 4 in this 5-week bar. We are week 4 in this 5-week bar. If we are talking in terms of counting like kind numbers, odds or evens, this bar would be considered a 5. This bar is 5. This bar will be 6. So this bar will be 7. 5 and 7 are like kind numbers in high time frame perspectives. 7 may bounce off of 5 inside of 4 hitting 4. It may not, but that's what it's showing the potentials for this week. It doesn't have to do it. It can come down and create a 2-bar back at this right here, come up and do levels, and it can come down and hit this main target for the 3. However, this is a previous 25-week low. That's a pretty substantial level. So it doesn't exactly have to honor it, but it does have a really good chance of doing it and hitting that low and coming back up. It could reject here, come down lower. It could go all the way up and hit these levels. We are still in bar 3, running against bar 1, 2 25-week bars back. So that means this is my low. Again, this is my high. This is my open. This is my close. And now we are in the third bar, and this is my opening level. This is my previous close, my previous low, my previous close. We are talking about these 25-week bars, these two right here. This would be a bar. This would be the previous bar. Previous low, 2 bars back. 4 and 4. That may be it. It may trigger. It may not. It could do this and run us all the way back up. We could then short the high of this 25-week bar, cause some disruptions. It may come all the way up. It's hard to say at the moment, but we can say for certain that we understand exactly where we are in a high time frame basis, and then in a 25-week bar basis, in a 5-week bar basis, in a 2 bar back basis on the 5-week bars. And we can understand that if we are to come up inside of that range, this in this bar here, if we hit this line down here, 4 and 4 could be a trigger, and it will be the previous 25-week low triggered. And this is my 25-week open level. This is my previous 25-week open. So if you understand how candles can run towards the previous opens and closes, you can understand how that does give it a possibility. And this is the triggering factor that could cause that. It doesn't have to, but it can cause it. And then for this 25-week bar, we may jump back inside of our red bar level, bar 1 range, and it may do it in bar 3. It may come down, do this, and play around, come up through, and then land on 1 and 3 and move. It may very well come down here, and it can come down here, trigger these levels, come back up inside of, and land on top of that, and land on top of this, play with both of them, and then still go up to these patterns and still be mathematically correct and absolutely perfect. So what I'm trying to explain to you is this is my range of a 25-week bar, and 2 bars back in 5-week bar form. This level up here is my range that I'm running at in this lower bar function down here. So we can take that and we can say that these are the levels that it can run at if it is to run off of this level and trade up. We've got this, we can turn that into the 618, you know, 6188, what to have your 886 and stuff up here, whatever you want. But that's pretty much what's going on a high time frame basis if it bounces off of that level. It does not have to come down and do that, but mathematically it does seem to want this lower red bar down here as a solid target. Now we can go up into a different math and consolidate these and get different information and clear up and get better clear targets without so many targets, and then do the like kind numbers, odds and evens, 2 bar back form, and get some clarity on this, which I will be doing. But for now, we need to focus on letting you guys understand where we are and how um, we're tied to the markets. And so this is our range. Don't pay attention to the green line over here. That's from something else. But these levels and prices that you can see right here, these dates and times, these are 25-week bars, 5-week bars. And then the overall thing is a 125-week bar, just to reiterate that. And we are down here, and we are playing with 2 5-week bars back. So this is our range. These are our levels. No crazy stuff needed. There, you can do some stuff if you like the fixed ranges, right? You can go to this level back here, and you can pull your fixed range over to current, because we're in our current 5-week bar, and we're looking 2 5-week bars back, and we want to see this level right here, and we're not wanting to use, say, a Fibonacci tool. Then that right there is our fixed range tool off of that 2 bar back form. Now, if we delete that one just for some clarity here, we can take it over here and we can use that fixed range tool off of this opening level for our 125 week bar 3 levels to understand how and why these levels are important. Now, do you see my opening range, my value area high up here? This is my value area low. We're toying in that value area low. We're outside of it, okay, at 2 bars back. And so for this math right here, this is at a triggering level. And so if we get something off of this range, it will be because of these mathematics, not because of the fixed range tool. We know exactly what can trigger it, to trigger it. 2 weeks back, 2 days back, 5 weeks back, 25 weeks back. It's all the same. I'm telling you the exact same trading strategy and showing you something that is extremely, extremely, extremely accurate. I'm not playing around. This is going to be some of the most accurate information that you see on the internet. And so this is what's causing it all. And I just want to make you very well aware that if I take these levels off here, clean it up just a little bit, and then to just make the chart a little cleaner, this is just where I was charting my way through it. We'll delete these little small ones and stuff like that. Okay, so this is what is happening right here. This is what's going on. High time frame, 5 week bar, 2 5 week bars back. Bar 4 is being targeted by bar 4. Boom. Do you see that? Boom. It came in for bar 4 in bar 4. And that's what the target is. So if we go down, we can see this stuff. You know what I mean? It's not it's not crazy. It looks crazy. It seems like it, but it's not really what you think it is. It's just running mathematical equations through the markets. And I'm going to show you how to find them on your own without any high time frame tools. Um, if you like the point of controls and the value area highs and value area lows, you can see how this stuff would work with that. And if you trust that and you understand that it's been broken, it's been hit again, and now it's back here touching and playing with this lower level. If we are to trigger and come back inside of that, then that means the value area high is the target. Now, this can change as more values come about. And with this 25-week bar, these values can change and it can move these levels. And they will move, but mathematically, make no mistake, like I told you before I put that point of control on here, that fixed range tool on here to show you points of control and value area highs and lows, just as a solidification factor, I gave you these levels and this level right here as a target, right? And I can tell you that when we go to this in this 25-week bar, there is a chance that when we enter the third bar of this third 5 week bar of this 25-week bar, when we're in this one, we can look in the previous 25-week bar for the third bar and the fifth bar levels. 5, 3, 3, 3. It's all tying us back to these levels, to mathematical perfection. I'm trying to get you to understand. Now, I just showed you that right there, and that tells you more accurately what's going on than this fixed range tool does. So, if you can understand that, then you can see how my mathematical system is absolutely superior to even the little tools that you put on here. I give you exact areas. I can give you exact days that things can move. I can do a whole lot of stuff. I'm not showing it to you yet because I need to get you to understand little bits at a time so that you guys can follow along and understand. I'll build the confidence in you if you're following along at this point. I deserve a like and subscribe, guys. I've been working at this stuff for a really long time and I'm trying to give it away to you guys for free. Nobody is doing that. Nobody is giving away this level of understanding, this level of clarity with a very simple trading strategy. like kind numbers, odds and evens, 2 bars back. No matter what type of time frame you're in, there's a 2 bars back strategy. And so that's all I got for you guys today. If you will just kind of chart this out on your charts, I'd greatly appreciate that. And then you guys can start to understand where we are and why and how we can run to these targets. All right, that's all I got for y'all today.